Hey, welcome to the Diary of an Apartment Investor podcast. I'm your host, Brian Briscoe. Today, I want to talk about something that I get asked all the time. If I had to start completely over today, no portfolio, no credibility, no track record, just the desire to get into multifamily to massively change my trajectory, how would I do things differently? Okay. And really, how would I go about replacing my income in 3 years or less while still working a full-time job? And that's exactly what I did. It did take me 3 years to replace my income. And if I were starting over today, I'd do it a lot faster with a lot less friction. First of all, here's what I wouldn't do. Okay, I wouldn't start by calling brokers. I wouldn't start by analyzing deals or markets or anything like that. And I definitely wouldn't be trying to do everything myself. Okay, that is how I started. And it ended up being kind of a slow process that, like I said, I wish I would have done things differently to avoid a lot of the mistakes that I made. Now, just to set the framework here, a lot of people come into apartment investing chasing passive income. And yes, passive income is a real thing, but not at the very beginning. All right. Early on in this business, it's very transactional. Okay. One deal is not going to change your life, but it can be the launching pad for something does. All right. In the very beginning, your cash flow, your passive income is going to be very low. All right. Your primary income is going to be coming from acquisition fees. Okay. Over time, as you reinvest those earnings, that's what eventually produces true passive income that's going to last a long time. Now, I've come up with a 4-step path that I would follow if I were starting over today. Step number 1, educate yourself. Okay. This is the part I did right, but I think I would change the emphasis of my learning. Okay. Books are fine. Podcasts are great, but the best way to learn is from real people. Okay. I would find a strong mentor and pay whatever they ask. Okay. In fact, that's what I did. In 2018, I paid $25,000 for the first mentorship program I was in. I've been in several, and I made more in that first year than I paid for that mentorship, and I've made millions since. Okay. The key difference in how I would approach it today, I'd obviously learn the basics of multifamily first. You can't go wrong there. But then I would focus entirely on raising capital. Okay. Not operations, not asset management, but capital raising. Okay. Where a lot of people get stuck is they think they have to do everything and they end up basically spinning their wheels quite a bit. Now, there's a lot of reasons why I would raise capital first, and I'm going to explain some of that later, but everything else will fall into place later if you can raise capital first. Step 2, you've got your educational foundation. All right, you know about multifamily, you've learned how to raise capital, it's all theoretical. Okay, now you need to put it into practice. You need to get into your first deal. I'd be looking for an experienced operator and let them handle the heavy lifting. Let them handle acquisitions. They can go out and find a loan. They can sign on the loan. They can take care of all the asset management and all of that stuff. And it's a lot of stuff, which is why on your first deal, you should just focus on one thing. Okay. And that's the capital raising. Let the guys with experience do the heavy lifting. My role, I'd look for an operator where I can come in and raise $200,000, $300,000, $400,000 for the deal. All right. In your first capital raise, if you can hit $200,000, you're doing amazingly well. All right. Now, the first deal, it's not about the money. You're going to earn something, maybe $10,000, $15,000 on an acquisition fee for that amount, maybe a little bit less, $15,000, but you're going to get some credibility. You're going to get some experience, right? You're no longer trying to break in. You're actually in your first deal. From when you start to when you can get, that first capital raise done, we're talking about, maybe a 6-month period, 3 to 4 months in that prep phase, and then a couple of months to do the actual capital raising. Step 3 is to build your momentum. Okay. You got your foot in the door, but guess what? You're still a beginner. And one deal is a great start, but here's the reality. If you've never managed millions of dollars or operated in an apartment complex, you still probably shouldn't be doing that at this point. All right. Especially if you have a full-time job. All right. So I would continue operating with experienced operators, if possible, the same one or the same ones, but focus on people who will help you learn, observe the process, and meaningfully participate. All right. There's a lot of operators out there that'll let you do that. There's a lot of people out there who say they'll let you do that, but end of the day, you're going to be on the email distribution list just like everybody else. Typically, you're looking for your smaller operators, not the gigantic ones that are going to have dozens and dozens of people raising for them. But With each deal, I'd aim to raise a little bit more. All right. And most importantly, I would be building my system. Okay. Automations, things that are going to make this a repeatable capital raising machine. Okay. Build that process. All right. And that's exactly what I focus on in coaching. Isn't, one and done. It's building a system that's going to work deal after deal. Now, here's what your progression might look like. First deal, you get it in the first 6 months, $200,000 raised. Okay. Deal number two, maybe you raise 300,000, deal number three, 500,000, and at this point, your acquisition fees are going to be somewhere in that 20 to $50,000. Okay. Not earth shattering, but you've at least replaced that money you spent on coaching. Okay. And you have a little bit more money in your pocket. Year two, let's pick a number, try to sustain $500,000 or more per deal. Okay. And ideally, I would try to get into one deal per quarter. There's enough time for you to find a new deal, find a new partnership, maybe a month to review things and 2 months to raise capital and rinse and repeat. At this point, your acquisition fees are going to be pushing into that 50, 60, $80,000, depending on how much you raise per deal. You're still working your W-2, but now you've got some extra money to work with and to invest. Year three, now at this point, you're kind of at a crossroads. All right. You're starting to earn meaningful dollars every time you do a deal. Your acquisition fees per deal are in the 30, 40, $50,000 mark. I just paid somebody $37,000 for helping on a deal that we just did. Paid a total of $100,000 out in acquisition fees to people who raised capital for me. So you can get larger and larger chunks as you go on. But this is the point where you come to a crossroads, which is what I'll talk about in step four. But you've built your system, you know how to raise capital, you've worked with different operators, you've been exposed to every part of the deal. Maybe you participated in asset management, maybe you've participated in other parts of the deal. But now comes step four, which is where you decide what your long-term role is going to be. All right. You participated in a handful of deals and now you get to choose. Okay. Do you want to be a lead sponsor? Do you want to be finding the deals? Do you want to be capital raising focused? Okay. Whatever you choose here, you're doing it with experience, credibility, track record, and you're ready to go. If I'm being honest, if I had taken this approach, I'd be a lot better off right now. I still would have been able to replace my income in 3 years. That part, I think I still would have nailed, but focusing on raising capital first would put me in a much better position right now, because right now, my biggest constraint, the thing that's holding me back, is how much capital I could raise. If I could raise twice as much, I would make twice as much right now. So just to recap, learn capital raising first, do it a couple of times, 3, 5 times, become W-2 optional, and then decide how you want to operate. If you want to start a fund, start a fund. If you want to operate the properties that you do, operate. Okay. That can all come later, but capital raising is the fastest way to get your foot in the door. And it is also the most important skill that you can do. Okay. Learn the skill that creates leverage first, and then everything else will follow.